Oren, I feel confident that you're not nervous, that you've done this before, not your first rodeo. Well, welcome everybody. I'm very, very excited to have Jordan Nathan and Oren Charnoff. When we first came up with the conceit for this, I think it was called something like, I'm old enough to know a lot of people in commerce and like, let's hang out. Like that was the name of the podcast, something along those lines. And so I'm officially getting to interview a couple folks who are much newer contacts. I think that most of the people I know in ecom. Oren and I met a couple of years ago at this point. I think you were kind of thinking through some stuff. I was thinking through some stuff and like talking startups and investing. Jordan, I'm lucky that Caraway is a customer of Orita, but you guys joined before I was even a co-founder, which is ridiculous to say. It was when I was like a consulting business and then like we turned it into a software company, and you and I met in person for an awesome 90 seconds a week ago. And I suckered you in on this. So thank you both for being here. This should be a fun convo.
Pumped to be here.
I want to start with some intros. Jordan, I want to start with you. Like everybody knows about Caraway, but give us the goods. Like, what's your background? How'd you come up with it? Yeah, please.
Yeah, well, thanks for having me, and excited to be here. I began my e-commerce journey about a decade ago. Actually, tried to launch my first startup out of college. Way back when, was looking to build an e-commerce platform for D2C brands. I think in the early days with Warby and Harry's and all the big names we all know, saw this opportunity where I didn't feel like those brands fit, at least at that time, on Amazon, and felt like it'd be really cool to build a e-com experience marketplace, for brands that, you really wanted to buy from and were less commodities like what you found on Amazon. Did that for a bit, wasn't able to raise the funding that I needed, but was a really great experience, and was also really fun to be on the marketplace side. So I got to meet with a lot of brands, and this was also like Shopify was around, but like a lot of brands were on like Magento, and there weren't all these, easy connections that you have today with Shopify.
We were on Inspire at the time, which was like big commerce. Yeah.
Yep, exactly. And part of our issue was like connecting the brands to the platform, and everyone had different platforms. Big retail brands were on, their own custom backends, et cetera. So did that for a couple of years, and then moved on to a company called Mohawk Group, which was one of the first Amazon conglomerates. They owned a bunch of brands, all developed from the ground up. I think today they do acquire some brands, but I ran Vremi, which was their kitchen brand, was brought in as a brand manager. I did a big rebrand of the kitchen brand, was kind of just thrown into it. I launched 200 kitchen products in about 2 years, and eventually was promoted to CEO of that brand. Essentially got to do everything under someone else's, roof. It was a great learning ground. Spent a lot of time in Asia, got to play around with a lot of new product categories, learned growth marketing, Facebook ads, inventory forecasting, managing a P&L. And, I think after going through this for 2 to 3 years, I kind of got to the point where I had been exposed to, I think, a lot of bad manufacturing processes and materials that I saw in the space. I actually got sick from a product test where I got Teflon poisoning from accidentally overheating a pan, and didn't really feel great we were just like sourcing products and putting them on Amazon. And I didn't feel great with just like selling essentially like plastic crap. And wanted to really create products that people love. So at some point I decided, I think I can do this myself. And, I really want to lean into beautifully designed products that are safe to use and, really, I think help bring people to the kitchen more. Left in 2018, started designing the brand, the product, and we launched Caraway in 2019. And for those who don't know, we're a non-toxic kitchenware brand. We sell cookware, bakeware, food storage, going after the whole kitchen and home. And we are digitally first, but we do sell omnichannel.
I love it. I have 50 follow-up questions, but I'm going to let Oren introduce himself. And then Jordan, I'm coming back to you. I want to talk, like, I was actually really interested in your first startup. So I'm coming back there, and congrats on everything with Caraway. Oren, I'd love to hear your background.
Hey, sorry. Speaking of background, I just had to switch rooms. Right as we started, the neighbor decided to cut some stones. I'm at my in-laws in Danbury, Connecticut, but Aaron, great to see you. Jordan, what's up? I'm Oren Charnoff. I live out in Tel Aviv, married with 3 kids, a 4-year-old, 2-year-old, and 1-year-old, girl, boy. I moved to Israel in 2018. I was working at a venture fund, and then in 2021, started my own software business, which we sold in 2023. Took some time off. And now I've launched a consumer VC fund that invests in Israeli founders building all sorts of consumer businesses. when I'm saying consumer, I'm going to say B2C. So we won't do commerce enablement, but we'll do, be it an e-com brand or gaming or anything that the consumer or prosumer purchases. I know Jordan for a couple of years now, and we're proud to have him as an investor in Fondue, and Aaron right while we were graduating after we sold the business, and I wasn't sure what to do. Our paths crossed. We spent a lot of time thinking about maybe doing something together. So it's really fun to be here. Spoken to you guys individually, but this is our first time as a trio.
It sounds like you made the right choice not pursuing anything with me. I'm not offended. I'm happy. You're happy. We're both better off. And I want to push for a second because you kind of like glossed over Fondue. What was the inspiration for Fondue? Like a 2-year journey is nuts. That is extraordinarily non-standard because you guys exited to Postscript, right?
Yeah.
So it's not like 2 years we shut it down, right? It was a win.
Yeah, we sold the business. Yeah.
What was the inspiration?
So the inspiration really came from my co-founders at the time, William Herlands and Abraham Lucy, who were operating at brands in the past. They started brands, they sold brands, and they had a hypothesis for a completely different product. And that was the inspiration, was the two of them and the thought that we had initially. That idea did not work, or we couldn't find a way to make it work rather. And so we pivoted our way into Fondue, which I could speak more about. But it came about because the initial idea was compelling, and the two co-founders, Abraham and Will, I'd be super happy to work with them again and again and again.
All right. You switched from operating into investing, right? And obviously you've done some investing in the past. And like just even when you and I were chatting about this, like you'd gone way, way, way deeper and were much more thoughtful than I had ever been. But you're not doing commerce tech and you are doing consumer.
Yes.
2 quick questions. One, do you think commerce enablement is a dead eco? Like we've seen this. I talked to a lot of investors. So like genuinely, I want to hear, how do you think about that as a investable space, if at all, or like which parts are investable? And then 2, like what did you learn from Fondue that's helping you figure out like who are the founders you want to invest in?
Sure. So I do think it's an investable space. I know not everyone believes that to be the case, but I think you could build big businesses doing it. I think there are very few examples of that. But again, we're reminded with the Klarna IPO, people will often point to a Klaviyo, which is not transactional, a Globally, which is in many respects pretty transactional, as like those are like some of the big commerce enablement wins as of late. Mostly the idea of building a B2C only fund came about, and this is not to talk my book, but genuinely in Israel, which is an incredible tech ecosystem, so proud and happy to be a part of it. It's historically just been built on B2B, and that's fine, and that's great, and that's awesome. But now we're 20 years into the startup nation's journey, and there are way more Israelis building B2C businesses than ever before. And the generalist firms don't have a primary focus on B2C at all, which is its own beast. And so a big part of me believes that there's a huge opportunity that can drive a really big impact on this part of the ecosystem. And that's where a lot of it came from, is I think there's an awesome opportunity. And I've loved consumer, so I'm happy to touch this part of consumer because there's a total opportunity.
If that was a portfolio company, you should pick it up. That is obviously the priority over any of us.
Yeah, no, that's, I thought I was on Do Not Disturb.
No, you're good, man.
Yeah.
There's like, my mom's watching. We're good. Just very quickly, and then Jordan, I want to come back to you. It's been a long time, but Startup Nation, which you kind of mentioned in passing, is an awesome book.
Sure.
Which is like, I haven't read in forever. And it's really funny because my wife's old manager at Facebook is this guy, Rod McCovey, who I'm sure you bumped into at some point, but like,
sure.
And that was the first thing he gave to her.
Yeah.
Just like when you start working, is like, you need to understand this. Anyway, well, congrats. I'll come back and I'll bug you.
Sure.
Jordan, I want to forget Caraway. You guys, wildly successful, yada, yada, yada. Tell me about the first startup. Like, I want to go a little deeper. Do you think you were too early? Were you the wrong CEO? Or is it like, are there components that you're seeing? I don't know. This is my 4th company, and I linger all the time on the old ones. Not like, oh, what could have been, but I'm still like, I think I was right about this. And I'm like always trying to update my lessons learned. So I'm curious about your experience there.
Yeah, I think a mix of things. I think the product was right. And I still think there's a gap in the market for like a great marketplace for products that you want. I don't know that anyone's like nailed that yet. I think the world and tech's evolved a lot. And I think the timing was right. And way back when, there were all these platforms like Wanilo, Keep, Wish, there were all these Chrome plugins. And the thing that I was trying to solve was like, you had all these different like tabs and marketplaces and apps that all did like specific features. And I wanted to pull it all into one platform so that You didn't have to open up a zillion different tabs. And I still think that's an issue with the consumer journey is just like, it's a lengthy shopping experience. You don't know when prices drop. You don't know when things go in and out of stock. You need to create wish lists that maybe you're writing down in your notes and stuff. And so it was a really cool product. We built it with a similar like UI to Spotify. You had like wish lists. It told you if like prices dropped, you could discover products. It would be personalized. So I think the product was great. I think, two things. One, I was right out of college. I'd never worked a real job. I was living at my parents' house in New Jersey. And, I don't think I knew what it even meant to like, work at a company, and was kind of out of the city and the startup scene. And so that was really challenging. I didn't have a technical co-founder, which especially at that time was really important to investments. And also because I didn't have a professional, career before that. Didn't really have a network to pull from. And then, I think 3, I'd say that tech was always a big challenge. Like, again, you could connect them with Shopify, but to do Magento, BigCommerce, kind of all these other platforms, things were just not as developed back then. So there was a big kind of tech challenge. So yeah, I always think back, I'm like, had we launched it and got it to market, I think it could be massive today. I still think there's a big gap. Yeah, it was a good experience and fun being on the other side and kind of hearing why or why not a brand would want to sign up to a marketplace.
As you think about Caraway and kind of like the next stage of growth, right? And I'm curious, are there like specific channels, and this may or may not rhyme with what you were building before, like now that you're the brand owner, do you think, like, what are the aspects that you think would have been really, really great to exist for Caraway? Is it literally just a new point of distribution, or is it?
Yeah. I mean, one, we're all looking for new acquisition channels, but I think what I was building, and I still don't see anyone doing this yet, is yes, we had a marketplace, but what we were really building was a whole data infrastructure on consumer shopping preferences, right? We were going to have wish lists. We were going to be able to track what you're clicking and eventually be able to do very personalized targeting. I don't know that really exists anywhere yet. We sell on 20 marketplaces. I have zero insight into like who those customers are. I can't send them offers if they're in an abandoned cart flow on a retail site. I can't target them. And so, I think that's something that's still missing, and we were trying to build. And also too, we had planned to build a whole ad tech platform on the back end as well. So like, I'd love to get the data from any marketplace we're in and be able to then go retarget those folks elsewhere. So there's a cool long-term play there, but something I still, again, outside of your ad channels, like no marketplaces are really doing.
Sounds like we have our first request for startups, which I was going to ask you guys about later. It is interesting to watch this space. I still get a lot of VCs sending me deals, being like, what do you think about this? The ones that have been really interesting to me are the B2C ones that are trying to like build your wish list, build your like AI enabled, hey, here's the product recommendation. I haven't inspected closely Daydream, but I know that team, like those guys are brilliant. So I'm very curious to see where they go. I'm with you. I love it. Oren, kind of going back to you for a minute, tell us more about the fund. Like, what are you looking for right now? What are the attributes, right? And again, I kind of want to double click. You have been the founder.
Yeah.
What are the things that you are looking for? Or like, what are the anti-patterns where you're like, oh, actually, maybe even if it's a good idea, this is not the founder I want to back. Like, how do you think about the human behind the company?
Yeah. So on the company itself, one of the things that we talk about, and again, this can change, right? Like, but at this moment, one of the things that gives us a lot of conviction is we really think distribution is critical in consumer. Like, it is the product. In B2B, oftentimes the market's pretty efficient in B2B. You look at a bunch of different vendors, you do some sort of RFP, whether or not you use those letters to evaluate them, to take a consideration on price and value, and you make like an informed, thoughtful decision. And it's not saying that consumers don't do that, but they certainly don't always. There's way more emotional process in the decision making. So the best product can often win in consumer. I'm sorry, in B2B, but in B2C, that's definitely not the case. It's essential for a lifetime value perspective, right? You don't want to sell someone something terrible, but we really like these distribution first founders where the product is just a part of the funnel. Hopefully the product can evolve over time. That's way easier with the digital product than something like what Jordan's doing, of course. But I think the funnel informs the product a lot. Some of that also comes from kind of just projecting. One of the things we did well at Fondue was distribution. And so we felt that, at least I was a more distribution-oriented than product-oriented founder. My co-founders were way more product-oriented. But something that we really deeply look for with founders is that they are the ones who own distribution on day one. Because that's where it really all begins. The best product that no one's heard about in consumer won't win at all. So that's one of the things. And then for like a core attribute of the founder, this is borrowing language from someone else that I find really compelling, is that it's creative, convincing, and relentless. Creative means you can just put a bunch of things on the board and see if they work out. Convincing, you have to raise capital, you have to recruit a team. And relentless, particularly if you're doing something in performance marketing, you just gotta always freaking you won't stop ever. And so those are some of the attributes. The last thing I'd say, sorry for being verbose, is particularly today, capital efficiency is essential, and understanding cash flow management is critical. Profitability is something way different than cash flow. So we are attracted when founders don't talk in the language of ROAS, but they talk in the language of POAS, profitability on ad spend, and what's the cash flow around that. So founders who are cash flow oriented and distribution native, where they own it themselves in the beginning, are things that we really like today, but that could change tomorrow.
I love it. That was wonderful. I would like to invest in your fund. This is very good stuff.
Sure. Great. Fantastic.
What's your
Yeah, no, I know.
Dude, that's really helpful, actually. I love the idea of distribution first founders. It is funny you talk about this from a B2B space. Obviously, very, very strong thoughts where a lot of times the right product doesn't win.
Yeah.
Like I've seen it across like everywhere, but I have 10 times out of 10 on the consumer side. Like I think it's a really simple, but like really hard to understand framing. Jordan, can I ask you a couple of questions about investing if you do, or like what you see in the startup space and like your modern founders? And then actually want to go back again. And I want to talk obviously a little bit more about Caraway. When do you actually write checks? If you do, like, what are you looking for in founders? How's like your founder journey impacted that? Or if you don't write checks, like when you look at other companies from the outside, like what are the attributes that you think really?
Yeah. I do a few angel investments a year, very small. I call them donations actually, because the checks don't really make a difference. And actually invested in Fondue, had my first exit with them, which is awesome. And now a Postscript shareholder. Yeah, I think, there are kind of two spaces I invest into. One, consumer brands, two, consumer tech. And at Caraway, we're vetting, 10 softwares a week. A lot of times I like to write checks into softwares that we use at the company. When, I feel like if Caraway is using it, we can help inform the product roadmap, and they at least have one customer. And then two, we're looking at all these platforms. So obviously, like whoever we choose, we feel like is the best. So love doing that. And then on the consumer side, I just sometimes founders I know that I really respect, sometimes product categories that I know nothing about that I kind of just want to learn from. And I love investing in non-toxic products and brands that really, I think play into the same wins that Caraway is building into. And I think from the investing side, I think to Oren's point, financial acumen is incredibly important. I want someone who wants to be extremely profitable, understands cash flow, comes in with terms already negotiated with every vendor, partner, et cetera, that they're working with. I think you need to have a really good handle on product and omnichannel strategy. And everyone today needs to be omnichannel. Everyone is going to have to build a multi-product portfolio for the most part. And I think I get scared away from like single product, single channel brands. Yeah. And then, I'd say ability to attract talent and teams and all that is important. And then I think lastly, just trying to pick up like who's relentless enough and resilient that you just know they're going to force it to be successful no matter what.
Jordan, I just want to say on that, your point about like the relentlessness is not purely on, performance marketing ads, right? It's with all the vendors too, right? Because there's constant margin that you could be chipping away from, 3PLs to the cost of goods sold. Like the relentlessness is hopefully pervasive throughout the business, not just on the marketing. I wanted to ask on, when do you think, and also Aaron, maybe you've seen this with some of the companies that you've been founding or the clients of your company today, when do you want to go omni-channel? Because you got to have a really good scalable channel that's not omniscient, right? But it's really got to get working. Like, do you want to be omni-channel just for the sake of it? Is there like a healthy enough of a mix that you're actually omni-channel versus, oh, you do 10%, that's not D2C. So Jordan, I'm curious in your journey or what you've seen from companies that you've backed, and Aaron, the same thing. Like, when does omni-channel actually matter? And in what way does it matter? Because you're probably still just going to be, Facebook shop for a Meta for most things. for a long time now.
Yeah, I'll answer. I mean, obviously different for every brand and category. I think in consumer, first off, I think it's important to prioritize and stay focused. But I think what the best brands do well is long-term planning. And I think with that, we at Caraway, I think one thing we've done really well is we only launch like one channel or partner at a time to measure lift. And so I think it's less about like, part of it's when, but part of it's like making sure you have space to measure and, whether it's an ad channel or marketplace, just rolling out one at a time for us. And at least our category, retail relationships take a long time. So we launched D2C first. I think our first retail relationship went live 12 months after launch, but we started talking with, I think it was Bed Bath or Crate and Barrel. They went at the same time, but those relationships started before we even launched. We didn't launch Amazon until three years in. We didn't need it. And we kind of layered it in after we saw a lot of organic searches coming in, and we just kind of threw stuff up. We didn't know what to expect, and it just grew like wildfire. And so I think tying back to the first point, like, I think you need to just list out your priorities and look at like what's going to drive the highest lift and ROI with the least amount of resource at any given moment. And make sure like every month you're layering in something new. And, I think the way we look at like growth in our marketing calendar is every month there needs to be something new, whether it's like a product, a color drop, a new channel, because if the core and base business drops in revenue, we've got something that's going to make up for it no matter what. So I think layering in those tests when it makes sense. Yeah, I think being open to, having those levers ready as well. Sometimes we'll do like upfront work, but not launch something so that when we need it, we'll go pull that lever. So I think also like making sure that something's prepped and ready to go.
When are you seeing most of the brands that either you've invested in or you've been a part of launching or that are customers of yours today? When are they going omnichannel, and are they really omnichannel? Like, do they have high double-digit percentages outside of it, or are they just...
Yeah.
Right? It's kind of like I remember at Fondue, oh, should we look to get off Shopify? Sure, but if we have 20% of our revenue that's not on Shopify, we're still on Shopify, right? Like you still have platform risk. You're still existentially reliant.
Yeah, I think my insights are definitely dated, so I would take this with a healthy grain of salt.
Sure.
So the background of my brand, right? I started it in 2010 on a lark. It was literally meant to be a 3-month project after business school. It was a watch company. We produced all of our watches in Shenzhen, right, in China. I got it through Alibaba, and then randomly started a B2B business where we did like a $60,000 sale to Google and a $40,000 sale to Facebook in the first like 5 months. And then I called my parents. I was like, so I'm gonna not continue with consulting and like getting my MBA paid for it, like all the things that happen if you are an adult. And then I ran that business for like 7 years, right, full out, and then 2 more. We didn't have like our own brick and mortar, but like we did a lot of pop-ups. We were like omnichannel from the get-go. We did like a B2C, we did corporate gifting, we did sports licensing. I was at every sports trade show. And so I got, like, if I reflect back on that business, like we scaled very quickly, but then it was like, we were really good at a lot of things. We were exceptional at nothing. So when I look at founders, of like consumer brands, and I don't invest in anywhere near as many consumer brands as I once did. I'm much more like commerce tech, or like I'm very happy when I get to step outside of the commerce world. I am like a focus wins type of investor. Like I want to see the relentlessness, but I want to see like a depth of understanding, yes, of product and everything, right? Like you don't invest in somebody who doesn't care about the problem that they're solving, but I think really about one channel. And then I want to have a sense that they have a very strong perspective about where to go with the future channels, but also that they're data driven and they're actually going to listen and they're going to probe and test. Like if I were investing in a brand today and it was D2C, I want them to do Amazon pretty quickly, but in a very like small testy type of way where it's like have a hero product or have something, but maybe don't have all the SKUs, right? But like literally just go validate. Or to Jordan's point, wait until you get enough traffic and you see it where it's like, okay, cool. Now we should start doing this. I would want them to play around with Leap, right? Like retail, like go do something for 3 months or 6 months, like go see if retail works. I want them to go to pop, like I want them to try Fair, even to say like, oh, do mom and pops actually want it? Does that make sense? I don't know, man. Consumer products, if it's not like a subscription brand and it's not a extremely high margin, it is so risky, especially at the early stages when you're undercapitalized to start expanding. I don't know.
I think one thing to add in too, I think when you're like looking at channels, you also need to ask yourself, like, if I launch something today versus in 5 years, is there like any difference, right? I think for us, there were 6, 8 other cookware brands. There's now only a few, I think in market, and that launched at a similar time. We started retail early because none of them were doing it. I was like, oh, we're going to go build a moat and block them out and win that business. And that's proved to be great because now we own the shelf space in a lot of stores while they're looking to now go retail driven. I look at like international, we only sell in the States today. Granted, I do think there's like non-toxic focus in Europe and that's growing really quickly. That's a channel where we look at and it's like, we could launch it today. We could launch it in 5 years and 10. It's not going away, right? So like when we do it, let's do it right and not like distract the company from what's working or what we need to move on fast. And so I think timing is a crucial factor to consider and, you know, like not forcing something if like you could go do it at a future point and there's no risk to launching it in the future.
Love that framing. I also want to go back to something that you said up front, which was like, you kind of talked about like different colorways or different products. Like you always want to have something new to say. And I think back to the CMO of my brand, whose comment was always like, your brand is only as strong as its weakest touch point. And I think deeply, I actually think you guys do an exceptional job of this is like when you launch something, it is like bold. You are, you know, you're not just like rinsing and repeating the same stuff. If you think about what worked for you getting into retail, or you think about kind of growth vectors now, how important are like the partnerships that you build? And I don't mean the channels, I mean like your collaborations and stuff like that. Or is that like, it's just something new that brings people back to see the core? It's like something interesting to say. Like how do you,
Yeah.
I don't know what I don't even know that there is a trade-off. So I don't want to create a false choice.
You're saying like color collaborations or,
Yep.
Yeah. I'd say vary. And when we think about the marketing calendar, we ensure like newness is a big piece of the brand. So we always make sure we have something new per month. And I think what we've learned is the newness is less about what is launched from like a revenue perspective. But when you have something, you know, you get a bunch of press articles, it's something to talk about. And you actually see a lift across the whole business. So early days, like new colors and stuff, were meaningful in terms of sales and did a lot better. I think today when we do them or we do partnerships, it's really about creating a moment for the brand, but also I think the approach has changed a lot where if we are going to do a partnership or collaboration, the audience that partner has is really the goal of the partnership. So like if we want to go after design-minded folks or non-toxic or moms, whatever the demo is, like we're going to choose a partner that has a demo that we want to tackle and is incremental to the business. If we're just choosing someone who's hitting the same people, it's really not worth pursuing. And then just like any business, we're drowning in opportunity and there's so many partnership discussions. And I think for us also, like if we're going to do something, that partner really needs to lean in. If we're just like taking your name and dropping it on our site, we're not doing the marketing for you.
Yeah.
We need to make sure you guys are like really leaning into that partnership.
I love it. So the watch brand, we actually turned into an influencer marketplace because we stumbled onto doing print on demand watches for influencers, which before it was like, and we call them like micro, nano, whatever. Like we were just figuring this shit out in 15 and it was wildly successful when the person was actually engaged and cared. But we were able to hit it in like niche after niche after niche. Obviously you guys are at a scale that's fundamentally different. You're not doing like 10,000 different, you know, new products, but
yeah, and the same goes with like retail partners. Everyone wants an exclusive color, right? And it's always like, well, like we spend tens of millions behind the palette we have. Like when people come into the store, that's what they've been marketed and they want to purchase. So like if we're going to do a color, it should be incremental and just, we don't just put a color out to have a color.
I love it.
It needs to add value and bring people into the store. Maybe it's on an end cap for the holidays, you know? So I think that incrementality is really important.
Can I ask you guys about AI? I don't know if you've heard this topic. Is this something? I definitely want to hear from both of you. And Oren, you can put on your commerce hat or your non-commerce hat. Like AI is changing everything, yada, yada, yada. How is it changing running a brand? Jordan, is it like it's empowering your team to do things faster? Is it there are better tools that are coming out? Is it, I don't know. Like when you guys talk about this internally, what are the real discussions?
Yeah. I mean, I still think it's early, but it is going to fundamentally change how people work. I wouldn't say Caraway is at like the cutting edge of AI use, but I think where we've really leaned in, one, pretty early adopters on the CX side. So we have a lot there where customers chat with an AI agent. And then our actual human agents have a lot of cool product databases where they can go fetch data and questions a lot quicker. Our team leverages AI a lot to ask for data insights. Instead of asking our data team or going into Omni, which we use, we can Slack and get that answer. It's been really good for new hires who need historical information, like using Slack's AI is great. And then I think we're using it quite a bit just on like efficiency, whether it's writing creative briefs, starting projects or documents. I think where we're excited but wary of right now is just like the creative that will come out of AI. I don't think it's quite there yet. And we as a brand really believe in authenticity in our content. So it'll be really interesting in terms of like how we use it. But yeah, excited to, I think implement it further. And actually just met with an AI consultant yesterday and he made an AI Jordan. So essentially everyone at the company can like run their work through an AI Jordan and
This
have all the
happening right now on this discussion that we're having. Are you Jordan?
I'm the real Jordan, but yeah, I think that's going to be really.
You've got about 15 minutes left. I think we can tackle that.
But that piece I'm excited for. On like, can we create agents that basically like uphold our values, our brand language, like how we do things, and ensure consistency across the whole business?
I'm trying to think what are the like things that my AI agent would say, and it'd be like, can you do that faster? My God, I love it. You know what's funny? And Oren, I think you get this, but like, I only do this because I actually want to do it. Like, we don't do, I mean, yeah, I don't know. I'm like interested in the people. And if it ends up being like, there's some really useful thing for a brand founder, for a tech company or whatever, like an operator, that brings me a lot of joy. So I'm not AI. Yeah, please. It's really interesting. That's cool. I mean, what a bold statement to make. We've definitely, our team size is, I think, less than it was at the beginning of the year. And we've grown, I think, 4x. And it's really interesting. And it's the mental shift that I've seen is like actually that opportunity that you're kind of pointing out, which is just like, it's not out of fear or anything. And it's not like, it's just like, we can do more. Let's do more. Like it's pretty exciting. Of course, I get into a sleep rut and then I wake up at 4:30 and I'm like, guys, I got more time to do, so there's a health choice as well with kind of being on this relentless space. But Jordan, do you think, like, I know you're kind of talking about creative, kind of two different questions. First of all, are there any of the softwares that you're using, like you mentioned CX or something, that like it's worth you sharing publicly so other people can hear? And if you don't want to, don't do it. But like, if there's like some cool shit that you're using, I'm sure other people would be curious, but no state secrets. So that is.
Yeah, nothing crazy. I think we use Customer on CX.
Customer with a K. Or no, Customer with a C.
With a K.
Okay, good. Okay.
And yeah, on the back end, I'm not totally sure what the team uses, but there's nothing like crazy or wild we're using right now. Most folks are just using ChatGPT or Claude. And then essentially like every software we're working with has some type of AI feature at this point. So whether it's your data analytics platform or Slack or Gmail,
I mean, I think it's wonderful how you kind of like talked about your team self-serving on the data side, which is just like an amazing behavioral shift. And like even the team self-serving on get the history of the topic on Slack, I think is really wonderful. I think literally like the behavior is the hard part at this point.
Yeah, I think the democratization of knowledge will be really awesome. And we're now at 100 people and we're virtual. And we've got all these departments and we hired 35 people this year. So there's a lot of new folks. I think that piece is really exciting, where I think both new and older folks can, I think, knowledge share a lot better.
Yeah. Oren, if you were to restart Fondue, given everything you know, right? Or like if you were to go back and be an operator, like what do you think you would do differently in terms of like how you think about building it? Like what tools would you be leveraging? Would you still like keep it, hey, look, all we care about is the consumer experience and like focus on there, get there in a different way? Like, yeah, what would be different first, please?
Yeah. Retention's always been obviously a big piece of our business, especially with our growing portfolio of products. I don't know if this would be true if I were starting a brand new business, but today we're very focused on more personalization of journeys. And I think when you're one product and smaller, you don't need to focus on this as much, but we've been sending a lot of just broad sends across, like over segmented in some ways. And we're getting to a point where I think we've really nailed who are the personas, what are the customer journeys based off first purchase or when they purchased. And I think the cool thing about AI and some of these new tools is it can help kind of automate and drill down. You can also drive yourself crazy with like every journey that you want to run. But I think that personalization is really important. I also think content as well, like what content resonates with which type of customer, and being able to test that a lot more fast. And I mean, text has been amazing for us. We use Postscript, and a really cool, feature of it is they've got their sales team who actually like proactively reach out to people and try to sell them. And so we've been doing a lot more there. And I don't know. I feel like 3, 4, 5 years ago was best practice to like, be very protective of your email list size. I think today, like, truthfully, no one's thinking about Caraway during their day. And as much as like we can get in front of them, per day is really important. And so we've really increased the velocity of texts, emails, and I think less precious on like unsubscribes across the board.
Oren, I never thought about retention. Like I thought about repeat purchase rate and modified, but it wasn't like a day in, day out. We were a MailChimp customer. I sent every email to every customer. It was a glorious time when there wasn't deliverability, as far as I knew. It was very easy back then. I think what we have seen, and I think part of our like growth recently is very much tied to like it is harder to target. There are more competitors, right? CAC is going up, yada yada, and so people are in a spiral. And this is not Caraway's at the opposite end, obviously, but like we see a lot of very, very big brands who are on the treadmill of revenues down year over year. I need to make up for it. So let me send that like 1 p.m. send, like the afternoon send on top of what I normally do. Some brands can stand 2 emails a day. Some brands can stand 1 email a week, right? So it's always your mileage may vary and it depends. But so then they start doing more than their customers want and they have a short-term revenue bump, but then their click rate drops or their unsubscribe rate goes up too much. And it's not about the rate. It's literally you've lost that customer from being in a free channel in a week, in a month, in a quarter when they're engaged. And so like we've seen a lot of that. And like people are like kind of on this like slow downward trend of inbox placement. The other thing that's been really interesting though is like, even if in kind of independent of that is because acquisition has gotten harder, people's lists have gotten more stale. And so they're also struggling, right? And it's like if they don't do what Caraway does, if they aren't able to tap into a new audience, right, in a efficient way, if they're not able to like candidly like have a good new story, something new to share, that's like genuine, right? Not just like a new photo or something, but like real. I think that like they have stale lists and they're not sure what to do about it. So then they just like spam people again, just to like get that short-term like revenue boost, which has like the knock-on effect. The place where we have started to look like even closer is like Orita. Like the conceit of Orita is like, don't email when you want to email. It's email Oren when Oren wants to hear from you. And it's like text Oren when Oren wants to hear from you and send him a postcard when Oren wants that, right? It's like not, we try to like get away from what the marketer wants and much more from like literally what the consumer wants. Like, how do you understand their engagement level? And so we've started going into multiple channels. So we do direct mail now. We partner with Postpilot. We're in a beta with Klaviyo for SMS with a handful of customers. It's like the same. We're very, very good at a ranking algorithm of like, does this send incrementally move him or her forward? We're going to move into retargeting, right? And so like the idea is like, how do we go hit up people across all their channels? Because like there is some alchemy to like Jordan wants a text and an email and then a postcard and then an email. Oren wants 15 emails. Aaron just needs one text and you do anything else and like it's just wasted. Like he's already going to buy. And so, yeah, I think there's a lot of desperation from a lot of brands that we're seeing in like trying to make it work in a very, very hard environment. And it's very much like you're making $1,000 more today to like throw away $2,000 in a month. And it's like, I was that brand owner. It is wildly difficult to not make that choice. I don't know if that answers your
I'd say the
question.
one,
It's always arbitrary. A 90-day engaged segment is arbitrary. Like you've clicked 91, 92, 93, 94 days ago, you're out. I clicked 89 days ago and left the site. I'm in. You multiply that by every data point you have and every channel and every bit of preference. Yeah. I love that framing from Postscript. Jordan, I see you nodding. I don't know if you have anything else to say, but I want to.
No. I agree. I think one-to-one personalization is great. And I also think it's critical on the site as well. And we're not there yet, but if someone bought a food storage set and is coming back, we want to make sure we're surfacing them something else. And if they don't purchase and bounce, it needs to all be connected to the retention side of things.
It's very cool. Like we do get the privilege. And again, like as a reform brand owner, like it's very cool to see how you guys work and like to see some of our other customers and be like, okay, cool. This is cutting edge. So yeah. Guys, we have a couple minutes left. There are like 50 questions I want to follow up on that I'm not going to. So I will text you and be annoying. Maybe just like a couple of minutes for like any big takeaway that you would have. Like Jordan, I don't know, man, like you're the wise old man in commerce. Wise young, but I see a low gray. Like you guys have built a monster and like a lot of brands look up to you. What like advice do you have for them? Which is such a terrible question. And I know it, but like, I don't know, like what are the mistakes that like you see brand owners making time and time again where you're like, guys, like you kind of want to like shake them and help them understand what good looks like?
Yeah. A lot of advice and wisdom from many mistakes over the years. I think one, I think when I started Caraway, I thought I'd be like sold and done with this 5 years later. It goes quick. And I think just advice to anyone is like, it's not a sprint. And, I think thinking long term and building to long term leads to the best decisions. And so I think if you take, hey, I'm going to be doing this for 10, 20 years, or we're going to build a $10 billion business, whatever your target is, that takes time. And I think if you take a longer term approach, it helps you with prioritization. Like, what do I need to do now to get to that 3, 4, 5, 10-year goal? It allows you to be really thoughtful and the hires that you make, the strategic decisions you make on a day-to-day basis. And so I think take like a longer term view. I think the second thing, and this is recent, is we raised all of our prices, not to start a whole tariff discussion. We raised all of our prices back in May, and I've wanted to raise prices for 5 years. I've been so nervous to. We've made some little tweaks here or there. It went fine. Like, once we got like through the funnel of people who were on the site yesterday or the week before, like, you build a great brand, people want to purchase it. So I think, if I were to go back or give anyone advice, it's like start high. You can always bring it down lower. Make sure you're making a profit on the first purchase. Make sure the business works. The more consumers that see that price point, the more normalized it becomes. I'd say like, don't be afraid to like price high from the start. It's easier to go down than go up.
Jordan, sage advice, and you and I are two peas in a pod. I learned this at Modify, where I went to some basically I was at a table with these 8 brilliant people who are like going to be one of our distributors. And they're like, what's it cost? I'm like, $30. And I'm like, that feels a little low. I was like, amazing. I was actually about to raise it to 40. They're like, that feels right. And then we kept going. And I learned that lesson very early, that don't cheapen your product. Obviously, if you want high retention, you have to still far over deliver on the value, but I love it. Thank you. Oren, man, you get the last word. What is some sage advice that you would give for marketers or brands right now? Jordan did, however, get to buy an island based on his investment into Fondue, as we've all learned. Yeah. Guys, I don't know if this one for you. This is really delightful. I have multiple pages of notes. I am so grateful with how you both ended with the long-term focus. I think it is extraordinarily difficult with how fast everything changes right now to say, cool, we're not thinking about how do we crush it next quarter or even next year, but where are we going? And if we're crossing this pond, where do the lily pads that we have to jump to? Sometimes they're backwards, right? It's just yeah.
Having said that, do crush it next quarter, next
also
year.
Crush it next quarter. Okay,
yeah.
Great.
No, but
All
one isn't at the expense of the other.
I've taken too much of your time. Fellas, thank you. This was really fun.
Thanks, guys.
Thanks, guys.